cloud. Recording in progress, some of my favorite words. Yes, hello to people on Facebook Live and people who are watching this. My name is Rebecca Wagner. I want to say welcome to Thrive Thursday with April Ranallo at Fairway Mortgage. And today we are going to be talking all things credit and home buying. And feel free to put some questions in the chat. And I will be monitoring the Facebook as well. And it's all new, so bear with us. April, why don't you take it away?
Perfect. I'm actually just going to this is going to be general for anybody beyond people looking to purchase a home. So even if you're buying a car, just have credit questions, etc., this is all going to be around your credit report, what you should know, things to do with it, and hopefully a little educational. But yes, I am April Ranallo. I work for Fairway Independent Mortgage Corporation. I'm a producing branch manager, and give you a little something about myself so you know why you should listen to what I know about credit. But I have been doing residential mortgages since 1999. I can help families and individuals purchase or refinance in all 50 states. A little bit about my background. I started off with Bremer Bank in 99, doing second mortgages, and managed to work into the subprime space. So let me tell you, round peg, square hole, it's my specialty. Obviously when 08 rolled around, there was a bubble, subprime went away. I went to go work for a national lender where I was at for 12 years and just switched over to Fairway. So the reason for going through all of that is to tell you that I have worked in all lending institutions, banks, brokers, national lenders, and I have worked for a paper, subprime, I've done it all. So any situation I can talk to you about, it is nothing new. If you have any general questions, if you're concerned about a bankruptcy, foreclosure, not a big deal. Don't be worried about reaching out to me, and I'd be happy to help. So I do a monthly lunch and learn. It is always the first Wednesday of every month. It's usually on Facebook and it's on a Zoom. So if that's anything you ever want to participate, everybody is welcome. Sometimes it's about just the general the real estate market. The June one is going to be about social media for people that need information on that. So keep an eye out for that. But I do work for Fairway Mortgage. It is one of the top mortgage lenders in the country. We've been around for 25 years. We have been top ranking for most purchase transactions in previous years. So it is a very reputable company if you're ever concerned about that. Okay, credit reports. Everybody needs to care about their credit, or at least somewhat pay attention to your credit. We all hear about these different data breaches, whether it was Target or Equifax or whatever it may be. It's important to monitor, and you should be looking at your credit at least once a year. There's Credit Karma, which is a great resource. You can reach out and get a free credit report from any of the major bureaus, which is TransUnion, Equifax, or Experian. And the information that you're going to get on that credit report is as follows. You're going to have your personal information, obviously your birth date, previous addresses, any credit accounts that you've ever opened up, which would be car loans, student loans, credit cards, mortgages, things like that. You are going to have listed on there how many people have pulled your credit before. It is the number one thing I hear about, you guys, which we'll probably talk about even a little bit more. But people are like, oh, I don't want my credit pulled. It's going to hurt my score, blah, 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 blah. That is actually not correct. If you go credit crazy at Christmas and have 20 different stores pull it to get your discounts, yes, that is going to impact your score. But if you are shopping for a mortgage or a car or something major like that, and you have a few people pull your credit within a 30-day period, it will not impact your score. It is a requirement, though, that all credit reports list 4 reasons of why a score is created. And in my 22 years of doing mortgages, every single credit report I have ever looked at always says too many inquiries. And even if there's 1 inquiry, it still has that because they have to list 4 reasons. So take it for a grain of salt. It's kind of a crapshoot. Beyond the positive things, the credit report's also going to show you the negative things, which would be any judgments, foreclosures, bankruptcies, collections, things like that. So if you look at your credit report and you see something that is incorrect, there are ways and processes for you to be able to dispute it. Unfortunately, you need to reach out to all 3 bureaus to dispute it with all of them individually. There isn't one central source. But if you have any questions on that, how to go about it, I'm happy to send you these slides. If anybody, you can email me, you'll get all my contact information, and I can forward this out to you so you get a little bit more detail on the process, how to go online, things like that. This is just giving you a way, or giving you a little bit more information about how disputing accounts can affect your credit. Sometimes if I run into credit reports that have too many disputes on it, we actually have to get the disputes cleared before we're allowed to proceed with the mortgage. So be cautious that don't just slap disputes because you think it's going to help the score or anything like that, because that's actually not the case. It's truly for an account that, a Comcast account that you didn't return the box, or you did return the box and they say you didn't, things like that. But it's not going to change or increase your score by you saying you don't agree with it. So be aware of that. FICO scores, why do we care about them? So your FICO or your credit score essentially impacts any type of borrowing that you do, or even if it's not borrowing. I don't know if you guys know this, but your insurance premiums for your car insurance is also impacted by your credit score. There's a lot of outside things that care about where you range in the list of it. Here's the thing. A lot of people don't realize that there are multiple different algorithms for who is pulling the credit report. So I mentioned Credit Karma before. Credit Karma is great. It's a great way just to keep an eye on things that may pop up, you don't know pop up, give you a general idea on if your credit score is increasing, is it decreasing, how is it being impacted? But it is not your be all end all score. A Credit Karma, or anytime a credit card pulls your credit, it is a general algorithm, and that's how it's for. When I pull your credit, it is mortgage specific. When a dealership pulls your credit for a car, it is car specific. So you could have a mortgage lender, a car dealership, and Capital One for a credit card pull your credit report in the exact same day, and it will give you 3 different scores, because it's different algorithms based on who is trying to lend you the information, or lend you the money, excuse me. So people get mad, like, my score is higher, my score is lower. If you're looking to purchase a home, you have got to get pre-approved by myself, of course, or a lender, to make sure that you are working off that correct credit report. What determines your score? Here are the percentages. 35% of your credit is determined by the payment history. Got to make your payments on time, guys. Next thing is a matter of the second biggest category is the amount of debt or that you have compared to your limit. So if you have $1,000 credit card limit and you are at $750, you're at 75%, right? You always want to maintain that to be below 50%, if at all possible. Even if you make your payments on time, even if you pay your credit card off every single month, the day you make your payment on a credit card and the day it reports to the credit bureau are not the same day. And so the way to keep your score up, or to kind of finagle it a little bit, is to always keep that balance below 50%. A lot of times you'll hear 30%. Yep, 30% helps as well, but the real trick is the 50% or under. Then, of course, they just care about, how much new credit, what's the history of it, and how long you've had your credit. So if you have that credit card from high school, I just had this conversation. I have an express credit card that I opened up because that's what you do when you're a senior in high school. I don't use it anymore, but I will never close that account out, because it is the one credit trade line that I have had for 20 plus years. And even though I don't use it, it could impact me negatively if you close out a bunch of old accounts that you've had for a long time. Now, if you're looking to clean up your credit report and you don't want to have so many credit card accounts out there, feel free to close a couple, but just don't wipe them all out if they're older, even if you don't use them. You better just kind of keep them out there.
Hey, April, we have a question. We have a question from Facebook. So,
whoa, we have a video playing. Sorry. Go ahead.
Oh, sorry. I'll stop.
Want to make sure you'll get paid.
I have no idea. Rebecca, give me 1 second. Okay, we're past the video slide. Go ahead.
Awesome. So, what are some great ways to build credit if you want to, say, buy a house in a year or two, or you want to prepare for a mortgage? And maybe you're going to answer that later on, but I just
No,
want
that's a great question, Astrid. So the way to build credit, ideally you want to have 3 different trade lines. Okay. So the great news is that it is easier to build credit than it is to fix credit. Unfortunately, it takes you 1 day to have your score tank, and it takes you about a year to build it back up. But if you have no credit, what I usually suggest is it's going to be credit cards. You know, a lot of people are like, oh, I don't want to go to a credit card, or I'm a cash person. And that's great. But unfortunately, to build credit, you're just going to have to utilize this tool. Target is a great spot, or, you know, Amazon. Pick some kind of a place that you utilize on a regular basis that you will not get out of control with, mind you. But they will always, even if you have no credit scores, they will typically issue a credit card, even if it's like for $250 or $500 or something like that. I also tell people, you know, try your bank or your Capital, you know, Capital One, which is a very common credit card, where you try to get like a general Visa, MasterCard, and use it for your gas or use it for your groceries. Use it for an expense every single month that you have to pay anyways, and just pay it off every month. Okay, so you're going to rack up $200. Well, today maybe $400 in gas a month. Pay it off in full. You'll pay no interest on it. Once again, when you pay it off in reports, it's not the same day, so it's going to constantly show revolving credit happening. You're not adding any expense that you wouldn't normally have, and that will create a score. And if you have no scores and you have a couple accounts, you should get a credit score within 3 months, sometimes 6 months. If you are concerned about where your credit score is, if your credit score is lower, you know, that's when you need to like reach out to me or reach out to a professional that you know. I am not a fan of credit repair companies you have to pay. I feel like there's a lot of things you can do on your own if you just kind of get the yellow brick road and not have to pay someone to do it. So if somebody's looking to purchase in a year or two and they're concerned their score is too low, I will have them fill out a pre-approval application and fill out the information. And we'll go over the details to prepare you. You know, we're going to look at your mortgage credit report, key, and we'll see if there's anything you need to pay off or something that you need to, you know, a collection you need to resolve, something you maybe didn't know about that was on the report that you need to call and try to dispute or clean up. I've been looking at credit reports for 25 years, you guys. I can look at it and tell you exactly, like, you need to do A, B, C, and D, and then it's up to you to do it. I tell people I don't babysit. I can give you all the information, but then it's up to you to go out there and do what you need to do, or maybe you just need time to pay something off or save some money or whatever maybe. The reason it is important to also include a professional on that is because just because you have a collection, once again, you guys, doesn't mean you just pay it off. There are some collections that report every single month and negatively impact you. In which case, yes, then I'm going to say, you know what, we got to clean this up, call them, try to negotiate 50 cents on the dollar, you know, and you're better off to have it say settled for less than balance than to be ever reoccurring out there. But there are some collections that may be from 5 years ago, or it was even a charge off where they completely wrote off the account. If it is not actively reporting and you go and you pay it off, which is a positive thing, it will negatively impact you, because when you pay it off, it is going to re-trigger it to be an active trade line because there was a change to it, and that's why it could possibly hurt you. These are things that even if you get a free, a free credit report, you just may not know how to read. Happy to help you. Have me look at it. That's my job. Any other questions, Rebecca?
One more question. Do medical bills count towards your score?
No. They used to. Medical bills used to have a much more impact on it. Now, at least in my world, all I can speak about is for mortgages, but medical collections do not impact like other collections or anything else. So.
And are there other things that have changed over time, like medical, like that we used to think that they impacted us?
Student loans do impact you. So if you think student loans do not, they do. You guys, if it's a big thing, if you have your student loan deferred or into forbearance, that's fine, but make sure you're making your minimum payments. And the biggest thing that I can say that's just like the real heart-wrenching thing is when somebody just doesn't know. You know, I've had somebody looking to purchase a home and there was an $8 charge on a Kohl's card because they missed a difference in a payment statement and it lowered their score 100 points. Okay. It wasn't that they weren't going to pay the $8 or couldn't afford the $8. They just didn't know about the $8. And it went on for months and it took us a while to clean that up. So that's why I tell people it's always important to kind of just maintain and monitor and keep some attention on it all. We good?
Sorry, that's all the questions I have right now, but
Perfect.
I'm keeping them.
Okay, well, we'll roll in. If you guys have more, I love it. Ask me the questions. Makes it a
Especially
little bit
common questions that are just coming to me as we're talking about this and getting ready to buy a house or get a mortgage or all those kinds of things.
Absolutely. Yeah, no, for sure. Here's your fun chart. Okay. My favorite joke is when I have people call me and say, oh, you don't need to pull my credit. I have a 950 score. Newsflash, guys, credit scores only go to 850. So, and they go down to, it's 350 to 850 is the range of credit scores. I've probably only seen something below a 500, maybe like once, but this is kind of a good thing. If you're purchasing a home and you are at a 740 or higher, you are in the very top bracket to get the very best interest rates on there. But you only need a 580 to purchase a home. So lots of options. How long things stay. I'm not going to go into detail on this, but the biggest one is bankruptcy. A lot of people feel that once your bankruptcy is discharged, it falls off your credit report. That is not correct. When purchasing a home on an FHA loan, you only need to have a bankruptcy discharge for 2 years if it's a Chapter 7 or 4 years if it's a conventional loan. Your credit or the bankruptcy will always show up on your credit though for 10 years. After 10 years, that's when it will finally just fall off and nobody will even see it that it existed. We kind of already talked about this, about how to increase your score, keeping your payments below 50%, you know, maybe negotiating or cleaning up collections and charge-offs if need be. And that's kind of wrap that.
So I have one more question right quick. When checking on one of the credit bureaus, let's say you have like, you know, whatever, something's on one of the credit bureaus and there's information that needs to be updated or is wrong, will changing one carry over to all three? Or do I need to contact all three to make the changes?
You'll need to contact all three. All three have to be, they're not interlinked. So unfortunately I have to call all three to have it corrected. Now, the reason the reason I pull a tri-merge or all three reports is that not every account reports to all bureaus, which is why we pull all three to make sure we're getting a collection of all the possible liabilities that you have out there. So if there's an account that's only reporting to TransUnion and Equifax, well, then you only need to, reach out to talk to those two.
Thank you so much. See, I'm just interrupting you with all the questions. So
perfect. And ironic enough, I am talking about how to build credit. I didn't know if I had that in here. So I'm going to kind of whip through this really quick, but like we said, open up a few accounts. There are ways that you can self-report. Okay, sometimes there's a way for you to have your cell phone bill or your Comcast bill or rent self-report on a credit bureau to try to help build credit. Another little trick of the trade is to ask a parent or spouse or something to make you an authorized user. If you're an authorized user on a credit card, it will report on your bureau, which will help create a score. It's kind of an easy little trick. For those that when we talked about rebuilding credit, a lot of times people are like, oh, it's so, but you did do bankruptcy and all your credit cards got closed out. There is secured credit cards, which are an amazing way to rebuild your credit. It's essentially a glorified savings / credit card. So I sent in $1,000 to a credit bureau, or excuse me, to a credit card company that was offering a secured credit card. And then they give me a credit card for $1,000. And I use that credit card like any normal credit card. I have a bill every month, a minimum payments every month. I'm constantly reusing it. But once I can prove that I am in good standing and I can responsibly handle the credit line, they will send me the $1,000 back. Because it just kind of sits out there so that in case you don't pay it, they have their money. I actually had to do one of these after '08. Everyone's had, I experienced bubble in the bad way as well. And I think it was about 2 years that all of a sudden I just got my check back in the mail that said, here you go. You've shown that you can do this again. And it was just a regular credit card at that point. So if you're not able to actually get a credit card to try to rebuild, this is the best way and really the only way to do it. So it's key there.
One more question. And I don't know if you know about this. Can authorized payer or whatever that word was
Authorized users, yep.
Work for utility payments as well?
No, authorized users are just strictly on credit cards.
Okay.
That somebody may have. But be aware that when you're an authorized user, if for some reason another person negatively doesn't make their payment, that it's on your credit report just the same as it is theirs. So be aware of that. And the other thing that I say is that it's great for the utility bills or the cell phones or the Comcast in the world to try to self-report some things. Just have to be diligent. I keep talking about returning the box, right? But I see so many trade lines, you guys, from AT&T or Comcast that have a collection for $200 because somebody didn't return a box or they returned it and the account wasn't cleared up. It's those little dumb things that you just gotta babysit and micromanage if that's what you're going to utilize to help build some credit. Okay, rate shopping. It's important. And like I said, people are worried about having too many inquiries. But here's a little rundown. If you typically, I would say, if you go anywhere from like 2 to 3 credit pulls within a 30-day period, the bureaus understand that you are shopping for something. And that's why it doesn't negatively impact your score. So don't be alarmed to do that. Even if you do, pre-approvals, right? We have a couple people look at it now and you don't find a house for 6 months, not a big deal. Inquiries are only looked at for the last 4 months. So just talk to myself or your mortgage professional on whether you should be concerned about any of that. Here are some great tools for everybody to utilize. It's just some different links and websites for you to get information about credit, check your score for free, how to order individual reports from each bureau. So take advantage of what is out there. And that is what I have. So once again, I'm April Ranallo with Fairway Mortgage. I would love to chat with you about purchasing a home or refinancing if that's going to help you. I can do it in all 50 states for all of our people relocating or snowbirds. Or if you just have general questions about credit, I'm happy to answer it. So give me a call. This is my cell phone. You are free to text me as well. My website is www.aprilranallo.com, where you can apply right online if you are looking to get pre-approved. And that's what I got for you, Rebecca.
I have a couple more questions.
Go for it.
Sorry about all the questions. Oh,
no, the question's great.
What is the difference between a hard pull and a soft pull of credit?
That's actually a great question. A hard pull is where an inquiry is actually going to get listed on the credit report. Okay. A soft pull is a way for us to kind of get part of the information, and it will not register on the report as an inquiry. So when we are pulling it in the mortgage world, we pull hard pulls. We need to make sure that it is a full report with all the information, public records, all reports, things like that. But when I say don't be too concerned about having your credit pulled a few times, I'm actually referring to hard pulls. So.
Oh, awesome. Yeah, see, I think these are great questions. And one of the other things that I know that you talk about with Fairway is some programs about locking in rates, or that program that you talk about that I never can figure out how to repeat back to other people. Can you talk about that a little bit?
Yeah, I would love to. I would totally love to bring those up. In fact, we have 3 different programs right now. Where I normally have slides, but here, let me do this. Let me actually stop the share. And in fact, if you don't mind, I'm just going to pull up a couple slides if that's okay.
You do you. This is great.
I'm such a visual person, guys. Like I need to have something to look at. So.
Oh yeah, I love it too.
That's why I'm like, God, I hope everybody else's homes are okay. That's just crazy.
Yeah, I hate it when the downside of Facebook Live is when I talk, I suddenly see myself at a weird angle.
I know, right? While I'm looking at a screen and camera's in a different one. Okay, Rebecca, can you see this confidence in closing?
Yes.
Perfect. 3 different programs out there, you guys, because it is a dog world in the market right now. So for those of you looking to purchase, I'm telling you, it is worth the struggle. Homes are only going to appreciate. The supply and demand is not going to change for quite some time. So tough it out. It will be worth it. You will make great money and build a ton of equity, even though I know it can be a little frustrating right now. So if you're having difficulties making a bunch of offers and not getting your offer accepted, I would love to help you. Here's 3 different ways that we can do it right now with 3 special programs that we have. One is called a cash guarantee. And what this is, I suppose I should probably play this. Even though I don't know how to do all this. Here's all your fun data, guys, on how the market is low and you're going to make a lot of money. And don't rent. Rent is increasing 25% year over year right now. Okay, here we go. Cash guarantee. What does that mean? It means I will have you fully pre-approved and we will give yourself or your agent an addendum to include in the purchase agreement that states your home will close on that date stated on the contract, no matter what. There is no financing reason that can cause it not to. Because if for something, for God knows what, if you lose your job, if you buy a car and you don't take my advice, to not open up any new credits, Fairway will then pay for the house in cash on that day of closing. Or they will give the seller the option to take $10,000 to walk away from the deal. Me personally, I take the 10 grand, relist it, sell it the next day and move on. But it is so that you can compete with cash offers and just give the sellers more confidence that you are going to for sure close on whatever date states and that nothing financial is going to stop you from doing that. It is allowed for FHA loans, VAs for all my lovely veterans out there, and conventional loans. So it can be for any product. It just needs to be for a single family home. The program is not available for any multifamilies. Program number 2, for those of you that are concerned with the market, because yes, rates are going up at record speeds. Rates have not increased since 94, this fast and this high, or this drastic, I should say. And you are shopping, but it's taking you a while to either find a home that fits your needs or for an offer to be accepted. We will lock in your interest rate for 90 days or 3 months while you are shopping for a home. Typically, you have to have a contract in place in order to lock, but this is a way to take advantage of the market now. And when you do go under contract, if the market is lower at that time, we will then lower the rate to the current market and you're locked in for 60 days. So essentially you have 3 months to shop and have the confidence that your rate will be no higher than X, whatever we lock in at. And when you find a home, you have 2 months to close, so plenty of time to close. And if the market's better, you can take advantage, but you're guaranteed it won't be any worse than what it was when you did the program initially. It's just to build in some extra confidence for the maximum payment you'd be dealing with and knowing that you can kind of stop bleeding. Last one is for all my new construction people. A lot of my clients that were under contract for new constructions this spring were supposed to close this fall, right? But not only are we having a problem with supply and demand on homes, but the supply chain for supplies is also getting delayed. And a lot of them, the homes are getting bumped to be not ready until next spring. So we are able to lock in a rate on any new construction for up to 6, 9, or 12 months. Same kind of concept as that Lock Shop Go program, where it just gives you a guarantee that you know your rate will be no higher than whatever we lock you in at. And if the rate is lower, within the 30 days of you closing, when your home is complete, we will then float you down. We'll give you the benefit, but you know it's not going to be at 7 or it's a little bit of an exaggeration, but it will not be any higher than where it could be next spring. This is a fun slide, which if you're a consumer, you may get a kick out of it, or if you're an agent. Here is 2 recent things that have happened in contracts. People are getting creative when they're trying to make sure that they stand out. So not only will these products help you stand out, but this lovely buyer offered wild tickets. Welcome to Minnesota, where if they accepted their offer, they would give them Stanley Cup tickets if the Wild made it into the playoffs. So I guess we'll have to see tonight, right? If this person's offer was accepted and if they're about to get some tickets. People are even getting
Wow.
simple, right? This was another one. This one I had to crop out of the contract because the address was on it. But this buyer offered the seller to buy them pizza every single Friday from their establishment of their choice, up to $50 a week, every week until they closed. So you want pizza Fridays? Your buyers will give you pizza Fridays.
That's crazy.
I know, right? I think it's super funny, but hey,
I
it
had
just
never
makes
thought of
it
that.
out. When you got 15 offers, 30 offers, 5 offers, we're laughing about it. If you were a seller, wouldn't you laugh about it?
I would. Any final questions for April? I know, Michael, you've had some. I'm checking on Facebook Live. It doesn't. There's no questions on Facebook Live. Um,
Perfect. And if they do, like I said, here's my contact info. Feel free to reach out to me.
I love this. Okay, so I'm going to stop your screen. Oh, let's stop your screen share so we can see you.
I will stop. There we go.
Okay. And
Hey.
thank you so much. This is amazing. This is exactly what we were looking for. And thank you so much for taking time out of your day, April,
Oh, thanks for having me.
to be
It's
the
fun.
expert that you are. So, woo! And thank you for being a good guinea pig for our first Facebook Live. So, thank you so much. And everybody, have a great day. And I will see you all tomorrow at the breakfast.
Everybody have a good day.
Bye. In the meeting.